Investors and traders, welcome to the channel Market Chart Pattern. Today is 12th of January 2025. Hope everyone is having a great weekend. We'll be taking a look at the key US markets for this video. We'll cover the bond market, the dollar, gold, and then of course the US equity markets. This video is for educational purposes only. It is not a financial advice. We had some fantastic price action last Friday because of the jobs report with the non-farm payroll. And this is where the real big impact was. It was in the bond market. So we are looking at the long bond futures chart, and you can see that last week it closed minus 1.87 percentage points. That's a pretty big decline. 9th of December 2024. It had declined by 3.15%, but you can see that the rates on the longer end of the curve, they are going up. So the bond market is actually telling us something, which is with regards to the inflation. And it's just basically telling us the rates are going higher because the chances, the market is telling us that there is going to be a lot of inflation coming through. So this is what the bond market is pricing, and this is why we have seen the US dollar actually being very, very strong as well, especially after the numbers came out last Friday. Now, this market is sitting right at the 78.6% retracement, but you can see the momentum is really bearish, and getting below this level of 111.05 is really bearish. So I think it's going to go and then tackle the 107 and make maybe even make new lows. So really bearish price action. And if we go and take a look at this on the daily chart, here we can see that, look, we had an expectation of an ABCD move higher, but never fulfilled. But I'll show you on the 10-year treasury note, it did actually. It was a very nice ABCD, and then just the market began to tear down. So what we are looking at here is this market pretty much right at the 78.6% retracement, but with this kind of bearish momentum, the chances are it is actually moving lower. Maybe we could see some sort of a dead cat bounce sort of thing, but it's likely to be short-lived. Let's see where we get this 38.2% retracement. Right here. So 50% is about 112.26. Yeah, maybe we could see some sort of a dead cat bounce up to this much. There was a really small bounce right into it right here, and if we just copy this, it pretty much takes us to this ballpark figure as well. So this is what we are looking at in long-term bond futures. And then let's take a look at the 10-year. Let's actually take a look at this on a TNX, which is the yields side of things. Look, it is just pointing out that it's gonna go for the October 2023 highs, and there is a potential that what we are looking at is actually an ABCD structure. And if it is, it could be really strong ABCD. Wow. So there you go. It could point to 5% on the 10-year treasury note. So maybe this is what the market is aiming for. And if we take a look at this on the 10-year futures, there you go. I just want to point out this on the 10-year treasury note. We had this ABCD, a really perfect one, and then there was an attempt to make new highs, and boom, off it went. So this is what we are looking at in the 10-year treasury notes on the daily chart. It's right here where there is a little bit of support, but this kind of bearish price action, I think we are looking for this market moving lower. And then here we go. There you can see, ever since this trend line broke down, we have seen market actually breaking lower, and then here we go. So I think 105 looks like where it wants to go, 105.12. Okay, now let's take a look at the 2-year. Here we go, shorter end of the curve. I'm gonna show this on the daily chart, and this is what we're looking at. There we go. So right, it is testing this. Maybe it wants to go and test this 4.46%, 4.45%. So we'll have to wait and see. Maybe I think it wants to go and tag this. It will be really interesting if the market is actually going to do this. You can see yields are on the rise, especially last Friday. It's a really big jump on the short end of the curve, 2.74%. This is what we are looking at in the yields. But the real interesting one is the actually the US dollar, because what is being reflected here is actually the dollar being very, very strong here. And the dollar was up by nearly 0.5% on the daily chart. This is the pattern we were watching for, and it has actually completed this, but it is very strong. Look at the momentum is extremely strong. Maybe it goes sideways for a few days. We'll have to wait and see. Dollar is strong. Yields keep on rising. The dollar is going to be strong. Now here on the weekly chart, we can see it's right in this box, but with this kind of strength, I think 111.45 is the kind of where the market might actually want to aim now. And I thought of maybe this is where we could see some sort of return come into the market because of the 61.8% retracement and 1.272 being here. With this kind of strength, looks like it wants to aim 111.45. So this is what we might be aiming for. And now let's take a look at gold market. So we move to gold contract. This is the COMEX gold. Gold was actually strong last week, and especially when the non-farm payroll data came out, we saw an initial knee-jerk reaction to the downside, and the prices began to actually move higher. So in my opinion, what it looks like is that the correction on the shorter term daily chart that we were watching for, we might have seen that correction, and gold aims higher prices now, so I think there's a chance that gold wants to actually now aim for a new all-time high, taking out this 2800. It's pretty strong right here. It will be really, really good. So it has actually closed above 2702, which was 61.8% retracement, but 2745 is the 78.6%. Getting above this, I think gold is very, very strong. On the silver, let's take a look. It's a different kind of a metal, and here we go. It's still in this triangle pattern formation, but maybe if it is able to get above this triangle right here, we could see a potential ABCD, which could see the prices go much, much higher. Let me take this. Here we go. So maybe 36.75. That's the ballpark figure it could actually move to. So here we go. And here we go. Yep, I think we could aim for about 36.70 for the silver futures. The key is that it breaks above this pennant formation. Getting below this, because the thing with these dynamite triangles, you can call them pennants, you can give them a nice little names to remember, but it's like an explosion when it happens. So I call them dynamite triangles. If it's gonna break either way, and then the move is pretty dramatic, so the chances are it might actually be a move to the upside. So we'll have to wait and see. If that happens, this is the ABCD. 36.7 is what we are looking at in silver futures. Now let's take a look at some equity markets. So we'll start by taking a look at the German DAX. Here we go. We can see the German DAX has been kind of at the upper end of this range. To make new highs, it needs to get above this 20,525 level. It is kind of in comparison to the US markets, it's just trading sideways, whereas the US markets saw a decline last Friday. So this market is stronger. And if we take a look at the FTSE 100, here we go. We can see that what it is doing is basically it's just in a trading range, the bottom of the range, now moving towards the top of the range. It's more likely to remain like this. And a weaker British pound might actually help, although the pound was weaker. But we still had a negative close for the day. in FTSE, just range bound market. While we are looking at this, actually I should have also looked at Euro USD and Bitcoin as well. So in Euro USD, this is the pattern that we were watching for. There's a chance we could still get there, which is gonna be 1.020. Getting below this, I think we might actually see parity happen rather quickly. So the dollar is very, very strong. So this is what we were looking for. And in the British pound, here we go. Let's take a look at this on the weekly chart. This is the big number we were watching for, around 122.60, and that was the 38.2% retracement. But the market actually did not respect that. It's just gone below it, which indicates lower prices now for the British pound. So here we go, and yeah, these were the pattern formations we were watching for. I think we are now aiming lower in the British pound. Here we go. So around 120 might be the kind of level it wants to tackle. So if the yields keep on spiking, it's gonna reinforce the US dollar, and we could see pressure come in these markets. But the gold was stronger, and if we take a look at the Bitcoin, you can see that Bitcoin might be following this ABCD pattern, so we could see it come down to about 88,000 and this 85,000. I think getting below 85,000, we open up the gate to, we had a target of about 70, 60, maybe even 50,000. 50,000 a little bit extreme, but 70 to 60,000 is the kind of ballpark figure where it could go to. So that's interesting because the gold performed better last Friday than Bitcoin. Although Bitcoin was up as well, but I think it's done pretty well as well. But gold also performed. The currencies, the fiat, they were under pressure. Now let's take a look at the S&P 500, which is the SPX here. So just a reminder, let's go back and take a look at the weekly chart. Here we go. So we had these big patterns completing ABCD right here. We had double ABCD in black, the bigger one, and we had this blue extended one completing this range. And this is what we have seen. We have seen a pullback, for about a month happening in the market now. The market is right at the 20-week moving average, and now the key thing is, look, this is the long-term trend line, which is still intact, but we could still get some sort of a deeper pullback. And if we take a look at this on the daily chart, we had really key support right here, about 58.40. 58.35. The market actually went a little bit below that. We have several of these ABCDs completing, the blue one, the red one, around this ballpark figure, but eventually we could get down to about 57.25, which is going to be 38.2% retracement of the lows of August of 2024, last August. This is what we are looking at in the S&P 500. The cash market on the futures. You can see it's going to be something similar, but I think it's more accurate to take a look at the daily chart for the S&P 500 cash. And this is ABCD in futures also being completed right here, and we have seen the pullback happen. Now let's take a look at the Dow Jones, because this is the most interesting one. In Dow Jones, we have seen this pullback happen very close to the box we had drawn. The market went into it, and it's been pulling back 1, 2, 3, 4, 5, 6 weeks, a month and a half. So there you go. It's a pullback happening right here, and then what we have is basically, there you go. I had a really important support level coming in around here, which was around 42,500. But what we have seen is the market actually break below that, which is meaningful, really meaningful. And I think we have got this ABCD pattern going on now, and the market could actually touch 41,000, and we have got pretty good support right here. So by the looks of it, some support coming in from structure around the 41,600, but looks like 41,000 is going to be the ballpark figures where this market may want to go actually. While we are looking at this, let's also take a look at the NYA, New York Stock Exchange Composite. So key resistance came in at the 38.2% retracement. I thought maybe, you know, it might be able to get above that, but with an ABCD, and yeah, it's not. I think there is a fair amount of bearishness in these kind of stocks. So overall, it looks like we have bearishness coming in into the market. The tech stocks are actually a little bit better. I'm going to show you that in a moment. So these NYSE also has the ADRs listed. So it's got about maybe 1,500 to 2,000 stocks or something like that. So looks like just the Dow Jones. We could see if it's in an ABCD correction like this, we could see about 18,000 happen on here. So 18,000 on the New York Stock Exchange Composite Index, NYSE, and then and then what we have got is yeah, so let's take a look at Russell 2000. Here we go. Very weak. We could be in this ABCD. It broke below this key support just like Dow. So, you know, with the interest rates, the way they moved, there's a lot of pressure coming on these small caps. So we could see maybe 2050 as if it's going to be in an ABCD structure. We have got some support coming around this level. So this is what we are watching in the markets. The markets, especially on the Dow Jones, did not hold this key support level. So what it means is that you know, we are looking at this market moving lower now right here. By the looks of it, there is some support from structure around the 42,000 and then 41,000. By the looks of it, this is where the market want to go. If it is in an ABC structure. So yeah, we could see some bearishness coming into the early part of the week. We did not take a look at the NASDAQ, so let's take a look at NDX here. And there we go. So this is NASDAQ 100. We have got we have got this ABCD completing right into this box. We have the symmetry here. So the tech market is a little bit stronger in comparison. I can also see another smaller ABCD right here. Let me actually change it to blue, and here we go. Yeah, so I think we could see some support between you know, 25 to 20,500, somewhere in that ballpark figure. And here we go. There we go. Okay, and let's take a look at this on the NQ, which is the NASDAQ 100 futures. Yeah, so this market is, of course, looks much stronger than the Dow stocks for sure. And yeah, it touched the 38.2% retracement as well, around 20,860 mark. So this is what it looks like on the weekly, longer term. Here we go. Here we go. This actually, this is when the elections happened, and we had this nearly about 22,000 as our target. It was met, and we have seen the market just go sideways in here. So this is what we are watching in the key markets that we follow here. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.